Hi everyone, if you read the title and think that we can catch the tops and bottoms, that means we will sell at the highest price and buy at the lowest price. Well, you're wrong. Most of the traders get used to the fact that the more the price drops, the more they will buy. The case of selling is opposite. In trading, we call it blocking the trend in a funny way. And you know the ending if you try to block the moving trend. In this video, I will show you how to catch the tops and bottoms. They are not like all other tops and bottoms. There are some specific tops and bottoms that could give you lots of profits, even just in one order. Of course, they have set stop loss points that help lower the risks. First, we're gonna go through some specific examples. This is Euro-British pound pair on 1 hour time frame. We'll wait for the entry when the breakout happens, or when the price retests, meaning that the price retests the breakout zone and create a good signal for entry. We set the stop loss below the nearest bottom, and the potential take profit area will be this zone, which is the nearest key level. In case when the price does not react at the bear zone but breaks through, we can let the price go further. I will explain specifically why I placed the entry, stop loss and take profit orders at those zones. Again, this is Euro-British pound pair on 1 hour time frame. This is how the price formed the candlestick chart. Let's see the higher time frame. We're going to 4 hour time frame. On this chart, when we drag it smaller, we can see that it had a downtrend like this before. Here we have a pretty cool trick that you can make the chart smaller. We don't have to look too much between multiple time frames. It will be very time consuming and it will affect the concentration. Now we will look at the nearest moment. Here we have a strong uptrend wave like this, and it broke through this previous top. There is a high possibility that the downtrend will be broken because the price broke through the latest key level. One more. Here there is an uptrend structure. At this zone, after the price breaks through these bottoms, it forms a downtrend. This downtrend may be short-term because the previous uptrend increased strongly, and it also broke through this previous key level. So any consolidation areas on this rising wave or the bottom zones could be the buy zones, which is where the bull rushes in. We can see that at this bottom zone, the bull also rushes in, pushes the price up, but the bear is still strong and pushes the price down. When the price goes down to this zone, which is a conflict zone, let's draw the zone. The bull rushed in and pushed the price up, then created a consolidation here. One other point to note is that this zone is also a Fibonacci zone. The 0.5-0.618 zone. This Fibonacci zone is strong zone. It doesn't show the supply and demand, but it shows about the amplitude of the waves. On 4 hour time frame, we can know that the price had just dropped to this area, and then the bull pushed it up. It could be a potential zone that could be a strong base of the bull. Now we'll go into 1 hour time frame for more details. On 1 hour time frame, the prices are forming a consolidation. We should notice this zone. The price reacts so many times on this zone. The bull tried to push up many times but failed. The bear rushed in and pushed the price down. However, since the last wave that the bear rushed in strongly, the bull pushed the price up immediately and then formed a higher low structure. It formed a gradual compression range, and it proves that power is still very strong, pushing up. At this time, we may have a potential scenario that could happen, which is first, when the price closed through this zone, it shows the bull already broke through the zone. All of the bear power are exhausted, and the bull are dominating, then we can look for a buy order. Second, when the price had broken up, it will usually appear a retest. We can look for a buy order at this retest phase, and our safe stop loss is below this bottom. Let's see how the price moves and see whether it breaks or not. here is the candlestick that we are waiting for. A very beautiful breakout candlestick which has a long body and no upper wick. It indicates a very clear broken power. The breakout with a candlestick like this are rarely a false breakout. We can play a buy order here. Place the stop out order here. And we can play the take profit order at this level. Because there is a strong downward momentum at that level, we can still expect it to go higher to further level, with a condition where the price reaches the zone where we feel the price could go back. If it reacts, we will close the order, and if there's no response and they're breaking green candlesticks going up straight, then we can expect to achieve a higher profit at the further level. Let's continue to see the price moves. So we can see that when the price goes up to this zone, there is a small candlestick, but it's still green, not red. After that, it broke through this zone strongly. At this zone, there's no signal to close the order. It's okay if we place an order. Place the take profit according to the return that we expect before, such as 2R or 3R. 1R is one risk, or place the take profit at a strong bearish zone. Then we turn the device off, let the price move randomly to stop loss or take profit. If we place the take profit at this zone, we could earn about 1.5R. If the price continues to go up, don't regret it, because we're still following our rules. So don't regret if the price hits take profit and goes further. We should be regretful only if we close the order soon, because we are afraid when we spend a lot of time on watching the chart. At that moment, we should be repentant of ourselves, be regretful, have a more concentration on it, then you can fix it easier. So here the price go for about 3R. So you can close the order, or you can use jelly stop to be able to make higher profit. We can wait for a bottom and place the stop loss below that bottom. So let it run and we try to apply that method. It's already created a bottom here, so we can move the stop loss below that bottom. Make sure our orders are safe. So the price gone up here and our take profit are hit. Of course, not every cases like this happen all the time. There are some cases that he made the bottom, went up and then went down to the stop loss order. It's not like you can close the order at the top, but the key is that you can close the order as expected and you are satisfied with it. Our profits are based on how stable we are to make positive number of R every month. And our value depends on the value of 1R, meaning how much we risk on one order. For example, if the value of 1R is $10 or $20, it's not worth much, right? However, if our R value increases gradually up to $500, $1,000 or $2,000, you can still manage your capital, and at that time you can live with trading job comfortably. And how can we increase the value of 1R? It's not like you try to place a lot of orders or earn a lot of number of Rs. Only 3 or 5R a month is okay, but it must be stable, because when it is stable, you can gradually increase the R value. It may be from $10, $20, $50 or $100. You're confident to maintain the stability. It's easy to develop. In conclusion, the key is not about earning many Rs, but the key is stability and the value of 1R. This is the end of the video. See you in the next videos.